Welcome to this week's ASX strategy session. Thanks for joining me. Great having you back with me for the live session, and plenty of interesting things going on to talk about today with the ASX moving around, the S&P 500. Of course, we've also got the commodities to go through, which are also interesting just now. And of course, at the end of the show, any of the stock codes you'd like me to go through, get those ready, and we'll go through them at the end because that's always a fun part of the show. Now, as always, everything today is general commentary only, doesn't take your personal situation into account. And having been through all that, though, let's jump in to our first chart. I'm going to start with the ASX 200. And so, like, if 2024 was the year of the rising tide with strong performances locally across the ASX 200, overseas, the S&P 500 and NASDAQ, they were, of course, strong performers. So if that was the year of the rising tide, what we're seeing at the moment, perhaps January's theme is shaping up as the month of the cross currents. And I've got some interesting charts to go through today and explain what I mean by that. And I'm also going to go through, we're going to discuss some of the strategy I think that can be used in this environment, and then consider how to manage this evolving price action that we currently have. First of all, let's start with this ASX 200 chart. At this stage, the overall trend does remain bullish. So this continues to be an upward trend until we get a clear breakdown, and we certainly don't have a clear breakdown at this stage. But the trend, I think, just in the last month or so, the trend really is starting to come under some pressure. So what we've got this steep decline from the December high. That broke below the November low. So we've got this low from November. The recent price action has broken below there. So what that does, that ends the sequence of rising lows. So we had this sequence of rising lows. We've had this sequence of rising lows pretty much all over for the last 12 months, except for this period in August. Otherwise, the sequence has been nicely intact. That was broken. That sequence is broken with this low in December. Now, that in itself doesn't signal a trend change, just as this move in August didn't signal a trend change. But it is a sign that buyers are less enthusiastic about stepping up and buying this dip. And now we've got the rebound. We've got the rebound off the low. So far, it looks to be a reasonable rebound so far, at least on the ASX 200. I think the key here will be whether the ASX 200 is able to establish a foothold above the 50-day moving average. So this is a 50-day moving average, and beneath it, I've got the 100-day moving average. So I think, as I say, the key is, can the ASX 200 establish a foothold above the 50-day moving average? And then that could allow a new base to form, and then from a base, we can potentially get to look for higher levels as we move through the weeks and months ahead. But if the ASX 200 can't hold these gains and instead falls back, and we find us back below the January low and closing back in on the November low, well then the chart structure really does start to weaken, and then we start to looking at that possibility of a multi-month consolidation or even a trend change. But we don't have that price action at the moment. The two key levels I think that we have to watch, we've got the December high and the December low. One of the possibilities is that what we could see is maybe the ASX 200 is in the early stages of establishing a trading range between these two key levels, the December high, December low. Maybe we're looking at a period where a range between those develop. And just remember what happened last year back in April. So back in April, prices sold off. They then started to rally back towards the highs, like we're seeing around at the moment. We're starting to get a rally, but then it took 2 months of just traveling sideways around the moving averages until we finally got prices breaking to a new high. And I think a similar sort of pause in the trend is a real possibility at the moment. So just coming back over to present day, I'll show you why I'm favouring the view that we're in for a pause in the trend, and maybe at that a multi-month pause. I want to show you the ASX 200 on an equal weight basis. So this of course is the market cap weighted version. So the bigger stocks have the most influence. CBA and BHP, they really do dominate, along with the other top 10 or so stocks. But when we move to the equal weight, and we're looking at each stock on an individual basis, so CBA's got as much weight as a 500 stock. Coming over to the equal weight, we get a different structure to this chart. And unlike the ASX 200, the equal weight hasn't been able to get back above the moving averages. In fact, it seems to be stalling and consolidating below the moving averages. And we've got these moving averages look like they're starting to get a bit of a rolling appearance to them. And so, as you know, when we get markets consolidating below moving averages, that creates a point of vulnerability. Now, this doesn't mean that prices will fall. We don't know. Just because a price is vulnerable doesn't mean that that vulnerability is going to play out and it's going to fall. But this is how the structure can start to shift from bullish to bearish. During the bullish phase, we've got prices rising and periodically coming back to the moving averages and moving higher. When the structure changes, it's the opposite. We've got prices falling, then coming back to the moving averages before declining again. So that's how the structure can change. As I say, it hasn't changed yet, but this is what we need to, I think, keep a close eye on. And so what I'd be concerned with would be if, of course, we continue to get this trading below the averages start to roll, and then the price starts to give way. That's a sort of price action to keep an eye out for. We don't have it yet, but that's this is how it can start. As I say, that may not happen, and this structure isn't present in the ASX 200. When we looked at the ASX 200, prices back above the moving averages, but we should be aware that it exists and just monitor how this develops. I'm working on the basis that the overall trend remains up until proven otherwise, but I'm prepared for the trend to take a break and for that longer consolidation. I think the way to play this is cautiously. I'm not in a hurry to do a lot of buying at the moment, just with this structural weakness starting to come into particularly the equal weight. I'm not in a hurry to do a lot of buying, but I'm happy to keep holding stocks that remain in uptrends. And as always, I'm giving my profitable stocks room to move with the aim of seeing off any further potential consolidation. And this is the thing, I don't want to be selling my stocks, particularly my best stocks, every time the trend comes into question. This isn't the first time the trend's come into question. We've had other periods below the moving averages where there's been cause for some concern, but things have worked out. So concern doesn't mean rush out and start selling everything. It just means taking precautions, knowing where stop losses are, and so on. I think knowing the exit levels and being ready to sell when necessary, I think that's how we approach this environment. Now, if you're getting some value from this, please hit that like button, leave a short comment, just, hey, thanks for the video, tells YouTube you're watching, YouTube shows other people, helps me heaps. Please do those things. Now, let's go on. Let's have a look at the US market. That's really interesting as well. After that, we're going to have a look at the small caps, the US small caps, the Aussie small caps, the commodities, the stock codes you want me to have a look at. We'll do that. We'll do that all a little bit later. But first of all, let's do the S&P 500. And now this, I think, is really interesting. What is going on here with the S&P 500? So this is a coiling pattern. Look at this. Look at the price action here over the last 3 weeks. It's really been starting to coil. S&P 500 made a high in December. It's then pulled back towards the moving averages, and now it's been compressing within this tight range for the last 3 weeks. So this, when you look at this chart and this chart on its own, this is a bullish setup. We have rising moving averages. So again, the 50-day and the 100-day moving averages, they're continuing to rise. Prices is generally above the moving averages. and we've got price trading sideways into the moving averages. So more often than not, I find that these type of patterns resolve to the upside. They're and I'd have to say they're probably one of the most reliable setups that I know, where you get price action that makes a high sideways into moving averages. Often we get the rally out of it. Of course, no guarantee that happens. Even the best setups can fail, but when we get these platforms um, in place, they tend to be platforms that lead to higher levels. And you can see the same structure if you go over to the NASDAQ. I won't call up the NASDAQ today because it's pretty much the same structure that we're seeing here and that I've just been outlining. Now, this is the interesting part. So that's great. We've got like a structure that can lead to higher levels, but this is what I think is really interesting. When we go to the S&P 500 on an equal weighted basis, so we did that with the ASX 200, now let's do it with the S&P 500 and take a mental snapshot of what we see there in the market capitalization based S&P 500. Now have a look at the S&P 500 on an equal weighted basis. And when you do that, that bullish setup I was just outlining and pointing out, it disappears. It's not the same structure on the equal weight. This looks more like the ASX 200 equal weight, where we have prices consolidating below moving averages and moving averages which happen to be rolling over. So it's completely different to what we're seeing in the S&P 500, which is really being dominated by a few of those big tech stocks. So this is telling us the rank and file within the S&P 500 is not performing like those big tech market cap heavy stocks. And when we see this, when we see prices consolidating below moving averages, especially ones which are rolling over, it opens that window of vulnerability that we often speak about. Something similar is playing out in the Dow as well. It looks more like the equal weight than the S&P 500 or the NASDAQ. And so this is something I think we really need to be aware of. Now, I want to show you a key indicator which relates to what we're seeing here in the equal weight. So this is showing us the percentage of S&P 500 stocks above their 100-day moving average. And look at this. Look where that is. Only 38% of S&P 500 stocks are currently above their 100-day moving average. And so this broke down in early December, and it's been in a steep decline since, showing some little bit of stability over the last week, but it's generally been in decline for the last 3 or so weeks. And it's extraordinary, really, that only 38% of stocks are above their 100-day moving average at a time when the S&P 500 is coiling up and looks set to make a new all-time high. So, so what's going on here? And these are those cross currents that I spoke about earlier. So we've got one part of the market suggesting a bullish case is still very much in play. Then we have another part saying, well, look, the majority of stocks are trading below 100-day moving averages. Below 100-day moving averages is generally a bearish sort of sign. The S&P 500, let's just go back to there, having seen that. So just coming back to the S&P 500. As I say, the trend here remains up. I think trying to pick tops in these markets, I think that's a losing game. I'd rather stay on the trend until it breaks down. But we do have warning flags, and I don't think we should ignore those. I think we need to take those warning flags seriously. So it's staying on this trend, but being aware that there are those other things going on. One scenario that I think could play out that I do think has credence is that the S&P 500, that it does break higher, and this is just a scenario, of course, we don't know, but one scenario is that it breaks higher, and at the same time we see the in this indicator, this percentage of stocks below the 100-day moving average. Maybe that has a rebound, because that is getting quite stretched below these moving averages. So maybe this is due for a rebound. Maybe that could happen at the same time the S&P makes a new all-time high, but then we see the breakout start to fail and prices pull back, and a larger consolidation gets underway. It could be that classic case of buy the rumor, sell the fact, and the scenario around buy the rumor, sell the fact. And this, in this case, could be that investors got really bullish around the pending Trump presidency, and then they start to moderate that enthusiasm as he moves into the office. This is just speculation on my part. I don't know, but just trying to put all these pieces of the puzzles together, how this could map itself out. For me, it all means staying long but reducing risk. And I'm doing this by not rushing to replace stocks as they hit their exit levels. I'm also considering scaling back some of my ETF exposure, but I do want to give this underlying trend the benefit of the doubt, but I'm very much aware there is deterioration in the market's underlying health. And I think we do need to take some extra caution because of that. I'm doing this by using the trailing stops on my profitable trades. As I said, I'm taking a cautious approach to new buying. And I really only want to consider the strongest setups, and I'm happy holding a bit of extra cash. Okay, so I want to look at the small caps now, because they're also an important part of like how all this comes together. And then of course the commodities and your stocks that we want to have a look at as well. But of course that wraps up the free section. So if you're not a strategy session member, there's a link below, click that. Come on in, doesn't cost much. You won't get this week's live session, but you get the full replay of everything we're about to discuss. And then of course you're there next week and we can look at your stocks and everything as well. So it'd be great to have you with that if you're not already a strategy session, a member. But for those carrying forward with me, you are strategy session members. So let's have a look at the next one. And that would be the Russell, the US small caps.